What's up, guys? It's Rob here, and today we're going to be talking about a lot of stuff that's going on in the stock market. We're going to be talking about CEI stock, BBIG stock, ATER stock, and a bunch of stuff that's going on in the market. So let's get into the video by looking at the chart for CEI first of all. That's what we're going to be covering first. Now, what I've noticed with CEI is that we have been bouncing around for the past while in this $3 to really, I guess, $4 range, but not really as of late, right? We've more so been hitting up on the $360 level over the past, on Friday before the weekend, and then even today we were hitting up on $3.60. So that is proving itself to be a bit of a resistance for CEI stock. Now, this stock was popularized on Twitter, and I've covered that in plenty of my other videos, so I'm not really going to discuss the people who are pumping this thing up on Twitter. But you can see that just 30 days ago we were down at lows of 33 cents per share, and now we're at $3.40 per share, so we have more than 10x'd. And something very interesting just happened with CEI stock that we'll definitely have to be keeping a close eye on looking forward. Options have been added to CEI stock, right? So now you have a couple of strike dates to choose from, October 15th being the closest one. You can see a ton of options are trading on this stock, and the open interest count has not yet updated, right? So it still shows 0 for all the open interest. That surely isn't accurate, but it will update by the end of the day, most likely. However, you can see that over 8,000 call options were traded just for the $4 strike price alone, 5,000 for the $5 strike price, 7,000 for the $6 strike price. So a lot of people are trading options on CEI stock, which just got added. I believe over the weekend they were added. So you can see that now there is an implied volatility line, this purple line on the volume chart, and we'll have to keep a close eye on the options, open interest call options for the most part, because these can oftentimes affect the stock price, right? If there is a large amount of open interest call options at a certain strike price, then that can either cause a gamma squeeze, where, if we start getting up to higher prices, right, if we have a bunch of $4 call options and those all become in the money, then whatever institutions were selling those call options would have to be buying up shares of this stock, raising the price even more to cover their downside, right, on those call options. However, there can also be situations where, say there are a lot of these $4 call options and institutions really want to stop the stock from getting to $4 so that they don't have to do that and don't have to actually lose money on those call options if they execute in the money. Then institutions will oftentimes, push a stock down and short a stock, trying to stop that from happening. So with CEI, you can actually see, now that these options are out, we are seeing a dramatic rise in short interest by about 10% today. That brings us to a 53% short interest as a percentage of the free float. This is nothing new, though. CEI's short interest has been rising as long as CEI has been rising in price. So you can see that, we're just kind of continuing on this trend upwards. This yellow line is the estimated short interest as a percentage of free float. And, it's just been going up along with the price of CEI stock. Now, it's very likely, it's getting to be very likely that at this point we could start to see some kind of short squeeze situation, right? Because we're at a 50% short interest as a percentage of the free float. However, it wouldn't likely be the largest short squeeze. And the reason is, even if we did see this stock rising up a bit and shorts had to cover, there is so much volume trading on this stock that the days it would take shorts to cover is only half a day. It's 0.53 days. For all of the short shares to be covered, it would only take about half a day worth of volume. So, while it would surely raise the price quite a bit, even if shorts did have to start covering, there is just so much volume trading on this stock, especially lately. If you look at these massive volume bars down here, there's so much volume that shorts could somewhat easily be buying up shares. And while it would definitely have an effect on the stock price, right, because half the day's volume would be, added onto by all these shorts covering their positions if they all decided to cover at once, which likely, wouldn't be the case. It would more likely be, just a couple of them covering. That would dramatically raise the stock price, but not, blow us out of the water to new highs that, we haven't seen in a while, right? It could raise us by maybe $1 in a very short time period. And for a very short time period looking forward past that point, right? Because when these shorts get squeezed, they're buying up a lot of shares of stock, and people are going to continue selling the stock even after the shorts are done buying. So even if the stock price got raised by, $1, then people would still be looking to offload shares. And that's kind of what we saw right here, right? A lot of shorts were likely covering. You can actually see there was a dip on, that was updated a couple days after this big pump up in price. The shorts actually, a lot of them ended up having to cover. It was likely around here that they were covering because this thing was running up quite a bit. It was breaking $4 and it actually got up to $4.85. A lot of shorts past $4 probably decided to cover just because they didn't know how far this thing could run. And that was, leading us up on some significant volume. However, that didn't last long, and more sellers began to come in, pushing us below 4 near the end of this huge day when we had reached our highs for the year, I believe. We've reached highs just on this pump up. So, it's very possible with this stock that we will continue running up. We're really going to have to watch out for whether we're going to be breaking through the $3 level or the $4 level first, right? I'm hopeful that we'll be breaking above the $4 level on some good momentum, seeing a rise in stock price. You can see that a lot of people are interested in CEI stock even today, more so than we're interested in Friday at the very least. And that's to be expected because we are actually up on the day, right? We're up about 5%. The markets are down. And something to note about CEI stock is that it is an oil mining company, right? And there is an OPEC meeting today. We're going to have to keep a close eye on this because this OPEC meeting is basically going to decide whether or not OPEC will begin producing more oil, right? They're going to decide whether they're going to produce more oil and basically send it out to people to lower the price of oil, which would not be good for CEI. A big rallying call for CEI stock is that it's an oil mining company, or an oil rigging company rather, and that there's a deficit of oil, meaning oil prices are rising and they're basically making more money on the oil that they're pulling out of the ground and selling. So that's actually really good for their stock price. That's a big rallying call for why people are, shooting this stock up. And if OPEC decides to start producing more oil, that would not be good for this stock, right? It wouldn't be the end of the stock because we do have some other catalysts like the short interest and now the options activity that we'll have to start paying more close attention to now that it's actually available to us. But the oil is a rallying call for a lot of people, and I know that some people would be getting out of this stock if OPEC decides to increase production by a bit. So that's something to watch out for with CEI. Now, BBIG is another stock that we're going to be looking at, BBIG right here. And you can see that we have been dipping down over the past while, right? We reached highs of $12.50 and since then have been subsiding and just getting pushed down to the $6 support level, which has been formed in the past off of resistance. You can see, and if we actually go out to the past 2 years, maybe not. I guess I won't be able to find it, but you can see that we have bumped up on this level a couple of times and have more recently been bumping up on it the other way, right? We've been moving down instead of stopping us from going up like as in the past, it's been stopping us from going down. And it's really kind of scary to see us dipping below this level a lot because in the past, it's been a pretty stark difference between, when we've touched it in the past, the few times that we have touched it, we used to bounce off of it and then bounce up in a big way. And then more recently, we bounced off of it, for a brief moment and bounced up in a slightly less big way, but still a big way. Then more recently, we've bounced below it, held below it for a while, and bounced up again. However, we have been having smaller bounces, right? We've been holding below it for longer, it seems, and having smaller bounces when we come back up above 6, which is very worrying to me, right? I think that this stock is losing a bit of momentum. Obviously, it's been a couple of weeks since we've seen the highs of $12.50 for BBIG. So people are losing a bit of faith in this stock, I think, and that is reflecting in the stock price. You can see that we are dipping down a bit, which is unfortunate. A lot of people are still holding this. A lot of people still believe in the squeeze. We are down a little bit on the day. We're down 2.61%. You can't really blame it, right? Because the markets are down as well. And, when people are transitioning to these risk-off positions, some of these short plays are going to be the first to go. They're going to be the first to get cut because they have the most potential downside oftentimes in people's portfolios. Because, if you look, just 30 days ago, we were trading at $2.17. And people look at that and say, well, it wouldn't be out of the question for us to move downwards and get close to that area again. Wouldn't be out of the question, especially with all the shorts that are shorting BBIG. If we look, there are quite a few shorts shorting this stock. If you look at the short interest, you can see 30% of the short interest is 30% of the free float is shorted. You can see that it's been rising dramatically and the shorts are just relentless when it comes to shorting this thing, especially as its price has risen. More and more shorts have just been pushing this thing down, and this yellow line almost directly correlates with the downwards pressure that we've seen in this stock price, right? Ever since it just started moving up, this stock has just been moving down and down. So a lot of the pressure that's a lot more of the downward pressure is from shorts on this stock, not necessarily today because you can see it's only increased by 0.4% today. So not the largest increase in short pressure, but it's notable that, shorts are pushing this thing down. Shorts don't want this thing to succeed. And a lot of the momentum that it's had behind it has been lost ever since this 1250 level. So I'm not too sure about this one. It's not looking good. The fact that we keep bouncing below $6 and having smaller rallies, it seems, off of these bounces. We bounced up to $8 one time, and that was actually on some crazy news that people were saying there was a 260% short interest on BBIG, which, I've done some research into it, and it seems to not be true to me. I know some people still believe it, but I believe that a lot of people kind of debunked that and are not believing it themselves. And that's actually why we ended up just dipping back down to where we were in the past. Now, with this stock, once again, we're dipping below 6. We're going to see what happens at the end of the day. Either we'll have, probably dipped lower or potentially risen above 6 and buoyed maybe to hopefully a higher level than we have the past time we bounced off 6, right? Hopefully we'll be able to break 650, get above 670. That would be nice to see. That would be bullish for the stock if we were able to bounce off of this level again and actually get, a new high over the past couple of days. That would be very nice to see. I'm not sure if it's going to be able to happen. I'm not as bullish on this stock as I am on CEI. CEI is still presenting a fairly good pattern. If we look right here, nope, not CIE, CEI, right there. It's still near the highs, and we really haven't had a massive crash in price, right? BBIG is down about 50%, a little bit more than 50% from its highs. CEI stock is nowhere near down 50%, right? We'd have to get down to almost $2 and probably like 30 something cents to actually be down 50%. So we're still a ways away from that with CEI, but BBIG, I'm a little bit less bullish on. Now let's look at ATER, another stock that a lot of people are interested in. You can see that we have had multiple big rallies in stock price, and these have come off of, the $9 to $10 range, right? We've, consolidated or bounced around the $9 to $10 range for a little bit each time before we've had these big rallies. And, it's looking like maybe that'll happen again, but once again, we're seeing a similar pattern where we see these bounces off of these resistance, or rather support levels, and they seem to be smaller and smaller each time. We have lower highs with this stock every time we have these bounces, right? Last time we were bouncing off 920, we ended up bouncing up to almost to above $18 actually for a very brief moment in after hours. But, since then we've hit 920 and only bounced up to not even $12. And now we're headed back down in a direction towards the $920 support level. We have broken through 10, which is really not my favorite to see with this stock, especially considering the options, the fact that there are 11,000 open interest call options. That's really the last big bastion of call options for October 15th for that strike date. Because, the 750 call options, there's only 3,300 open interest call options for that. So there's 11,000 for 10, 14,000 for 1250, 20,000 for 15, and these really are significant numbers of options, right? If we actually got this stock moving up quite a bit, if we had the momentum to do that, then there could be a gamma squeeze type situation where this stock continues to get shot up based off of the things that we talked about prior, where institutions would have to start buying up shares of the stock to cover their position on that. Now, if we look at ATER on Ortex, you can see that this stock has been getting shorted kind of to oblivion, right? A lot of shorts have been pushing their money into this, and we have actually seen a couple of short squeezes that have been responsible for some big rises in stock price. You can see that's what was going on here and here. We actually have been somewhat successful in getting these short squeezes. However, what you see happens with ATR is oftentimes, when you see one of these squeezes, more shorts come in. And that hasn't necessarily happened as much this past time, right? Shorts are getting a bit wary because we are hitting this $920 level. We have hit it multiple times, and it has been providing fairly good support, right? We'll have to see if we break through it today or the next day, but it has provided good support, and we have actually seen big rebounds where shorts end up getting kind of crushed, right? When we dipped down the first time in price, when shorts actually got squeezed, we ended up bouncing up all the way to 18, and shorts kind of got squeezed again, it looks like, and we're forced to close some of their positions. Now, with ATR, there's always the chance that we'll see another short squeeze like that, because it has happened in the past. Obviously, this stock is capable of gathering a lot of momentum behind it and really pushing upwards in a strong way over a couple of days, and that's what ends up getting shorts worried, right? When they see, day after day making highs and highs and highs, and that's when they start to actually get worried and start to get squeezed. Maybe near the end of the day, they'll get kind of antsy seeing the stock has made new highs that day, and they'll be looking to get out their position before other shorts do it, right? Because it's almost like a race. When shorts see that other shorts are covering, they know that can cause a squeeze, and they'll almost, cover in a kind of self-fulfilling prophecy, looking to get out before the other shorts. It's kind of like a game in that sense, similar to when you see positive price action. People will try to buy before everyone else with those momentum plays, and, it always ends up going the other way at some point, right? Always it's the case that, you shoot up a lot and then you take a dip down. That's the case with pretty much every stock. Stocks never remain at all-time highs forever. And especially with these short squeeze plays, they can be very short-lived because shorts are oftentimes very intricate traders, right? They're institutions or whales. And those traders know how to trade quickly. They know how to use algorithms and all kinds of technology that we can't really access or afford to access as retail traders, but they can trade very quickly. And that's why you often see these big shoot ups in stock price when there is a short squeeze. It's not because everyone just places their order all at once. Oftentimes, these shorts have algorithms that are working for them that identify the correct time to actually limit the risk. And sometimes those don't always work out, right? Oftentimes, the stock will be rebounding in a downwards direction the day after a short squeeze, as is usually the case. But you never know which one of these days is just going to continue pumping, right? Because we've seen day after day, ATR can just pump and pump and pump. And you don't know if this is going to lead into an even bigger squeeze in the future. So oftentimes, the algorithms can help out. They can help limit your risk, but they can get you into trouble sometimes. So that's what I wanted to talk about with ATR, BBIG, CEI. Those are the stocks that we're talking about today. And hopefully I've done a good job of covering those. I'm trying to make more concise videos and actually kind of combine a lot of stocks into one video instead of making an individual video for each stock. It just takes a bit to process all of those individual videos and make thumbnails for them and all that. So let me know in the comments if you guys prefer this kind of style of video where I talk about a couple of important stocks each day in one video. Let me know if you've enjoyed that. Or if you'd prefer for me to go back to just talking about one stock in each video, because I think this might be a little bit easier for both of us, right? You guys only have one video to click on. I only have one video to make. That might be a little bit easier. So other than that, guys, that's all I've got for you. If you enjoyed the video, feel free to like it. Feel free to subscribe to the channel. And other than that, have a great day. I'll see you in the next one. Bye.